Hi, everyone. Welcome to the TimingResearch.com Crowd Forecast News, episode number 224 for May 13th, 2019. If you have not had a chance to look at today's report, we are going to be discussing report number 294, and you should be seeing the first page of the PDF version on your screen right now while I'm talking. You can also get your own copy of the report at TimingResearch.com/reports. And you can access either the web or the PDF version there. We are broadcasting live on YouTube at 1 p.m. Eastern Time, but you can also listen to the audio-only podcast version of all episodes on iTunes, Spotify, Stitcher, Podbean, or wherever else you listen to podcasts. Just search for Timing Research and subscribe. My name is David Kosmeter. I'm the creator of Timing Research, and today I've arranged for Fausto Pugliese, Bennett McDowell, Jake Bernstein to join us, as well as Norman Hallett is back to moderate today. So I'm going to go ahead and turn it over to Norman.
Thank you, David, and thanks for putting this all together. We have a terrific show for you today because we've got three people, and then me. These three people are really giants in their field. Fausto Pugliese, we call him Faustino Pugliese.
I'm going to kill you.
I tried.
I know you for like 10 years, 20 years now.
I know, but believe me, it's not easy. Hallett, my name is easy. Jake Bernstein, one of my mentors, is here today, Bennett McDowell, and I'm going to be moderating for you today. Let's start with just a short introduction by each of us. Fausto, tell us a little about yourself.
Yeah, so I'm actually one of the original day traders that started back in 1995. Started one of the first schools in today's industry. Basically worked for some of the top online day trading firms here in New York. Learned how to be a good day trader after losing a lot of money, and figured I had to go learn from someone, get mentored. And what I learned on the first day on the job, I shouldn't have made my first trade. So I really just focus on high frequency trading, teach people how to read level 3, how to follow big orders. I run a professional trading room, online trading room. I've been doing it ever since for 25 years. We've got hundreds of traders that we trade with. And, big thing is not just trading with them, making money, but trading with them. So it's been a fun experience. Loved it. And you can always find out more visiting us at TimingResearch.com.
Cyber Trading University. And Bennett, how about you? Why are you here?
Yeah, sure. Well, we started TradersCoach.com back in the 1990s, late 1990s. I traded money for some of the wirehouses in New York before that. And we started TradersCoach.com purely as an informational site in the beginning. And then as technology increased, we brought software to the forefront. And we predominantly today work on trading tools in the form of software. We teach traders how to use these tools. And then we also have a variety of online courses and educational content. We focus primarily also on risk control. We think risk control is a big part of being successful in this business. And I know everybody here today feels the same way, or else we probably wouldn't be here today. So we focus on that. We have traders now in over 80 countries worldwide using our software and trading tools. It's been a blast. We trade, basically stocks, futures. I personally don't trade Forex, but we have a lot of clients that do. And that's our story.
And a good story it is. And Jake Bernstein. Jake has been my mentor right from the beginning. And since that book, Investor's Quotient, which I particularly think is still the best book on the mental and emotional issues for traders, which we're going to talk about a little bit later in this show. But Jake, why don't you tell us a little bit more about your background?
Thank you, Norman. It's good to meet you all, you guys. And again, good to see you after so many years, Norman. Mm-hmm. So I started trading in the summer of 1967. So I've been trading for 52 years. I'm a real trader. I'll trade anything that moves. I trade purely technically. I offer a weekly capital markets report, which is a video recording where I show the indicators. We always use the same one, so it's completely consistent, totally objective. I've been on Wall Street Week, written 48 books. I run a website called jakebernstein.com, and that's what I do.
Excellent. And I'm Norman Hallett. I've written 2 books. That's right, 2 books, and they're both right here. One's on trading plans, and one is just some inspirational quotes for it's really kind of a restroom book where you, right before you start trading, you take your final pit stop, you can read some quotes to energize you. for your trading day. My career started really in the mental and emotional areas of trading. The Disciplined Trader was a site, is still our main site, and I married a hypnotist, and maybe that's the reason that I saw my trading turn around when I started to get my head together around the mental and emotional issues of trading. And then I realized
you were blinded by science.
That's then I realized that I was training traders to be very disciplined with their trading plan that were lousy trading plans with no real risk management. So most recently, my passion is something called simple trading plans, where I try to instill the fact that simple is good in trading, and that all you really need is a simple trading plan with good risk management and good entry signal management that you can follow. And so simple trading plans is what I'm passionate about right now as an adjunct to the Disciplined Trader. Okay, let's get into it, guys. I see in our list with the report that the crowd is favoring the short side of the market, 56.3% to 43.8%. I also see that the crowd can be just as wrong as they are right. But how about our small crowd here? We're supposed to have a little bit of insight about what we think is going to go on to the market. And this insight is from today, and we got a pretty good lead on what may happen this week to the end of the week, to Friday. What do you believe is going to happen this week? What direction, Fausto, do you think the market is going to take? And can you give me kind of a percentage of conviction on your choice of direction?
Well, if we get another Trump tweet, then maybe that'll bring the market up, because it seems like every time someone's tweeting, if it's not, China just came out, because that's how it all started this morning. I mean, China came out that says we're going to go after those tariffs. And, and that's when the market really turned. I think we were positive almost 100, 150 points this morning when it all started. And all of a sudden, right around, for the market open, we have a big dive. So, it looks very, very negative. We just broke through a major support level when the Dow broke 25,500. Now we're at 25,250. The S&P is down 76. So we could probably be down to probably about 1,000 points at the end of the day, because it doesn't look like we don't have any good supports until about 25,000.
I'm going to have you give us more detail on that right after you tell us your percentage of confidence that you think the market's going to go down this week.
Okay.
What's your percentage?
My percentage, probably about 70%.
Maybe higher. How about you, Bennett? You've been pretty good at this in the past. What's your feeling about from today through Friday?
Well, I agree with Fausto that we are starting to take out, or at least very close to taking out, some key levels on a variety of the indexes. I think I'm going to give it an 80% to the downside by the end of the week. It's not going to go down every day. You'll have a little volatility, up days, down days. Working, when you ask a forecast, even if it's just 5 days, in the markets, that's a little bit like brain surgery. I mean, it's tough to always have a good accuracy, even 5 days out in terms of probability. But it looks like we're heading down today. And I think based on the charts that I'm looking at, that should be the major theme of this week. So
okay, I'm going to ask you more about those charts. I'm going to ask you more about those charts that you're looking at in a second to kind of back up your thoughts. Jake, you've got the most experience by a few years here. What do you think is going to happen?
Oh, thank you, Norman. We triggered a sell 2 weeks ago after being bullish for 7 years. We've reached all of our targets on the downside, so it's really all about timing right now. When you have this kind of a decline, which is based on news that was known before the fact, you tend to bottom. So I'm going to give it a 70 to 80% probability higher by the end of the week. Pinpoint either late today or early tomorrow as an opportunity to buy. So it's all about catching the falling knife.
Mm-hmm. Yeah, and now I'll tell you what I think, and I agree with the crowd that we're most likely maybe in the 70% area to see a lower close than we opened today for all the obvious technical reasons. Most of them are glaring, but I do want to emphasize that close. I want to see what happens in the close today, and maybe tomorrow. Sometimes Tuesday can be a counter day, and counter trend day. So if this is truly a downtrend this week, then we may see an up day. If that's
can I interject something? Norman?
Sure.
You have a very significant news development this week, which is not China whatsoever. It is the fact that they started trading the E-micro S&P, which is 1/10 the size. It's not been unusual that when a new contract starts trading, the first thing that happens is it goes down and the public gets hammered. So think about that as a contrary opinion indicator.
That's actually what I had this here to ask about this. And now that you've mentioned, I might as well ask you right now. I mean, why is that? Is it because small traders are getting in and they're excitable and uncontrolled? Is that what's happened?
Small traders usually want to be bullish, so they're looking for an opportunity to buy. They buy and they get hammered. It's a very, very sad but typical situation.
Yeah, and yet for those with experience with small accounts, this new micro mini account opportunity will be a way to they can scale in and scale out if they've got good plans. So
more opportunities for bad traders to lose more money.
There you go. I think that's what I just said. Didn't I? I'm not sure. In any event, let's get into a little bit more detail. Do you have Fausto? Are there any charts or anything that you kind of back up your thoughts about a lower market?
You know, it's just more or less just seeing all the orders just keep coming out and just keep banging it out. They're trying to sell into whenever they're getting buyers out there, they just keep selling into it. I keep seeing it, and I'm just mainly just see a lot of just high frequency orders just keep coming out. Once they hit these major resistance levels, they're just not breaking out of them. You know, Uber, for example, on Friday, when I was trading Uber, I mean, everybody's like, you think it's going to break out, and then just all of a sudden it just collapsed. You know, it didn't break higher highs like some of the other IPOs came out, especially after seeing what happened with Lyft. They tried to price Uber a little bit, you know, within a normal price range. It should have went more than Lyft, but Lyft tried to go out there and went to 90, but they're all getting crushed. So I see a lot of selling going on. Listen, you got to remember the market ran. You know, from the Christmas crash until now, there's going to be a buying opportunity eventually. So, but as of right now, just let until we get until we get something, this still is going to tank. I mean, well, I'm in cash, so that's all I care about. That's what thing I like about day trade. Day traders, you're always in cash. You don't have to worry about it. I mean, and you just get ready to jump.
I go back and forth about that because I find that the indicators are a little bit more accurate the longer time frame you give those bars to happen. And so sometimes I get upset about how, you know, I mean, 200-day moving average means nothing in a 10-minute chart.
Yeah, it doesn't apply to day trading at all.
Yeah, it gets worth it. I'm just saying that I've just noticed that some of the indicators that I use are markedly more accurate the more, you know, on a daily chart and a weekly chart and so on.
Mm-hmm.
So it's a much more relaxing way to trade if you keep your position small and so on. Bennett, you were brave enough to mention that you had some indicators or a couple of charts that were pointing you toward a bearish prediction. Can you share some of that?
Sure. I just put a couple charts up there now, so you should see that. Can you see it?
Yes.
Okay, great. All right. So basically, I have the E-mini in front of us here, which is, you know, smaller contract of the S&P. I thought that was really interesting, Jake, what you mentioned about the new contract coming out this month, because you're right. I mean, new traders tend to be bullish and actually frightened of taking short positions or thinking about the risk involved in trading sometimes. So I thought that was a good point. On the E-mini here, I have the 60-minute chart on the left, daily and the weekly. The 60-minute chart is usually a chart I look at for a more short-term trend or analysis of the market I'm looking at. And one of the indicators that I really, really like a lot is this one. This is something I developed called the PTF. When it's red, it has about a 75% accuracy rate of indicating more lows are coming. And, you know, really, I mean, look, it's dropped off quite a bit here. So really, it's only saying we're going lower than today's price bar. So that's not really going to help us too much, but it is a very bearish signal, especially when you combine it with this histogram here measuring momentum and the overall trend here. If we look on the daily chart, what's more interesting is we've got a red PTF here, and it's been red really all the way back since this low was created here back in 2018 in December. And it's indicating here, it doesn't tell you when it's going to happen, but it tells you there's a high probability that this low here is not the final low. And so that's kind of significant. So that means any run up that you have off a low like that, it can be temporary and probably should be traded on shorter term timeframes. However, in a situation like this, what's interesting is that with it still red here, this is a fib. Can you still see this chart? This is a fib retracement area for a correction based, like Fausto was saying, on this huge uptrend that we've had for so very, very long. A normal fib retracement of 38.2 to 61.8 is going to bring it into this target range. And if you do Elliott wave and all that kind of stuff, this would be a wave 4, and this could possibly be a wave 3 top. So that's kind of eventually where we're thinking this is going to head down. And with a red PTF and the momentum here on this indicator just turning bearish, it looks like it may be heading down to that level. Now, one more chart, and then I'll switch out here. This is the Dow Jones on this chart here. And I've got a little bit more information on this. One of the levels that we're looking at, we're getting very close to that today, is 25,252.46, which is the bottom of a channel that we've been in since really this almost entire year, if you want to extend it out to here. So we're getting close to breaking that. And here's the high probability target zone for the Dow, down to 38.2 to 61.8 on the fib retracements. And believe it or not, it's 20,268 to 16,130 with the red PTF here as well. So those sound like horribly low values. But again, if you take it into context and go back to when the bull market, really ran, that is a normal fib retracement for even a bull market. So after a wave 4, then in Elliott wave terms, you have a wave 5 and make a new high on wave 5. So that's kind of what I'm thinking right now on both the S&P and the Dow, and why I think that.
Interesting. I mean, you kind of went back and forth between Elliott and fib, and I'm not sure everybody understood it, but the wave, as I remember, wave 4, it's the corrective.
That's right.
It's more of a shallow, isn't it generally more of a shallow corrective wave? Or no?
Actually, it usually corrects 38.2 to 61.8. And, there's a range. So if it goes in the upper range, just to 38.2, that could appear fairly shallow, but it also at times can reach below 61.8. So 70% of the time, Norman, they end in that range. Mm-hmm. Now, sometimes, this area here, I don't know if you can see it on the chart, but there's a red line at 23.6, which is a fib retracement. 15% of the times they fail and in there. So that would be shallow. But with the red PTF, it's basically saying from a probability standpoint, nothing's certain, everything is probabilities, that this is not the final low, that we will eventually get down to this area here. Again, what the PTF does not tell you is when.
Norman, may I share a chart?
What's that, Jake?
May I share a chart?
Sure.
Yeah, I'm done.
Yeah, we're ready. We're ready for you, Jake. What do you think about it?
Okay, hang on 1 second. I'm going to share a chart. Let me know if you see it.
Okay.
Got a moment, please.
All right.
Just hang in there.
Take your time.
I'll figure this out.
Oh, I'm seeing it opening, so you're in the. It looks like we're on the right track. We could be. I'm seeing it opening, the opening circle. I think I see you see the same opening I do.
Just hang in there.
Yeah.
Should be coming up right now.
We got
And
seasonal trader.
I'm going to go here and I'm going to get a seasonal chart. Let me show you something. U.S. futures. It takes a little while to post. What I want to do is show you the normal behavior of S&P at this time of the year. It tells me a lot. And what it basically says is this. The next week or two are essentially unpredictable. So if I go to right over here, S&P, and do a little search, and I'm going to search the June contract. So what I come up with is, and it'll show momentarily. If I took every June S&P futures contract back to the start of trading, I can generate one chart that shows the normal seasonal pattern at this time of the year with the percentage odds higher or lower at the bottom of the chart. So the June chart should show momentarily. Here we go. So what does it tell me? This is June right over here. This is where we are right now. It said the second week of June would be of May would be down. The third week unpredictable, but the last 2 weeks very predictable. So for me, I'm not trying to predict the unpredictable.
Mhm.
I want to predict the predictable. So for me, any significant buying will wait until the last 2 weeks of the year. I've got some significant odds, and I can zoom in on this and show the daily numbers as well.
Last 2 weeks of the month.
Last 2 weeks of the month.
Okay.
So this is what I'm looking at right here. And basically it says this week, unpredictable to lower. So it's doing exactly what it should do.
Mhm.
But when we get the kind of decline that we've seen with small traders being very negative, about 80% of them will be down, will be negative as of the end of the day today. I'm looking for a place to buy because I love to be a contrarian.
Mm. Well, you've always been a guy who's paid a lot of attention to seasonals, and I've just learned over the years that you've got to wait for your trigger.
Yes, you do have to wait for your trigger, Norm.
Because I've seasoned myself to death a couple of times, thinking I knew everything when I first started working with seasonals. But you're right. I mean that's pretty impressive right there. That spike up.
So I will stop sharing and turn it over to someone else.
Okay, let me then again. I'm looking at simple, the simple way of looking at this, and I think you see my chart there. Can you guys see that?
Yep.
Okay, so this is a simple TradeStation chart. It's a daily chart. And you can see where I've connected what was resistance that became support, and it was resistance right up to here. Now it should be support. Maybe by the end of the close of the day it will be. But this is a lot of air down here, and so there's. If you look at the momentum indicator, this is a dressed up for a Saturday night party version of the RSI. And it's actually Hema Reddy's version. She's done some very, very interesting things with this. And what I'm looking at here is really, of course, a down where we have the momentum coming down and no real reason to believe it's going to do anything soon. You see where it gets oversold in these areas where you have had some reaction, but sometimes it can go down a heck of a whole lot before it has its reaction. So I'm seeing really nothing that to stop this at this point, at least the next day or two, which is consistent with what you guys seem to be saying. Okay, let's.
Can I show one more thing?
Absolutely.
Let me try and do my screen share again. This is very dramatic. Let me see if I can do this right.
Bennett, can you give us a drum roll?
How's that?
Okay, here we go. Let's get that up on the screen. Hang on one moment, please. You see my chart?
Yeah, I see it.
Look at the last few days of this month. Beginning on the 28th, 29th, 30th, and 31st. 4 strong up days percentage-wise with a very significant size of the move. So that's what I'm looking at as my next big trade.
Now, why does this happen in seasonal? I mean, you've got super confidence because it's showing us something dramatic, but what is it about seasonals that, I mean, because it's just history repeats itself, but what is it about the last week of the month that means anything?
It all means nothing except what has happened. I'm going with the lessons of history. That's all I'm doing. I don't care why it happens. I just care that I can find the patterns.
Gotcha.
And you'll notice the 28th has got a 100% reading, which means that if you juggle the data the right way, approximately 100% of the time since the start of trading in S&P futures, the 28th of May has been an up day. Okay, let's find out if it happens this year, because this year it's the Tuesday. Let's see what happens.
Now, would you, if people are playing that, would they be buying on the close of the day before, or would they wait for the open of the next day?
Close of the day before.
Gotcha.
And today's what? What's today's the 14th?
No, I think it's
13th.
13th.
13th. Okay, so here we are right in between 13th and the 14th, showing that we should return to a small uptrend over the next couple of days. And so this is the area we're in right now in terms of the current decline. So that's what I got.
Interesting, very interesting. Well, let's get to the question of the day, which really is certainly in Jake's wheelhouse, and I know that Fausto in our private conversations have had has a particular place in his heart for what the mental and emotional issues are. As David has written the question out for us, what are the most important mental and emotional characteristics for traders to develop? And give me the top 2 or 3 or whatever that you think, Fausto, that you think it's important for traders to focus on as far as the mental and emotional characteristics are concerned.
I talk about that all the day, Norman, and actually learned a lot from you regarding that. This is like when you have expertise on it. But the biggest and most important thing, don't take things personal. People take things personal. They get political. They're like, oh, or they don't like this company, what it is. Listen, unfortunately, with catastrophes, there's opportunities. All right. So just don't get, by not getting emotional is when you're not learning how to take a loss. You don't know, you're just not getting out. There's a thing that I actually teach. It's called the 30-second rule. What that means is that when you buy a stock, you waited and waited and waited and waited. As soon as you bought it, you thought at that moment in time it was going to go a direction you thought it was going to go. If it doesn't go within 30 seconds, chances are it's a losing trade. It doesn't take a ball more than 30 seconds to bounce, and that's really what comes down to it. So it's more or less, not getting at the right time, knowing how to cut your losses, and don't hold things personal. You know what I mean? Like, you know what? I hate this company. I'm going to short the stock. Yeah, let me know how that works out for you. And I see people do it all the time. Or the other aspect, like people love the company. Oh, I love this company, the greatest company, and they'll just ride it down to zero. I'm like, what are you doing? You could just buy it cheaper. They're like, oh, I can't. It's such a great company. It doesn't matter. There's companies that I'm not a fan of Facebook at all, but and I actually don't like Facebook, period, for what they do, but. Doesn't mean you can't make money when you could have bought it at 40 and it went to almost 200. I mean, there's just so many of them out there. Pharmaceutical drugs, same thing. People are like, oh, I love this pharmaceutical. I actually buy the drug. Then why is it getting crushed? You wrote the thing down. So I think that's where a lot of the emotional comes into it. Don't take things personal and know how to cut your losses if you're not in the right direction within that time.
Well, you're talking ego now. I mean, people wrap up their ego and they've got to be right, and they'll find any way to do that at their own expense. So yeah, I think it's not a war. You've got to make a plan and make it happen.
Well, let me just add one thing to that, and you're right, because I think a lot has to do about it. That's why you got to have more of a business mentality as a trader, because you're running a business, right? And just because listen, there's some nice people I like in this world. I would never do business with them, and there's people that you can't stand. Like I respect the guy. He knows how to make money. He knows how to run a company. And that's what trading is all about. You just have to run it like a business. And you just like every stock is an employee.
Can I comment on that? Can I comment?
Yeah, go ahead.
Fausto, great point. I tell people to make money trading, you have to not care.
Mm-hmm.
As soon as you start caring, you have emotional attachment. As soon as you have emotional attachment, you're going to fuck up. It's very simple.
Yeah. And I couldn't have said it any better. Maybe Fausto.
Amen.
Yeah, I mean, I think we all, in fact, in our training, we talk about one of the 6 core elements of the subconscious trainings is really you're trading to make money, and that you've got to run it as a business. I mean, people, they make profit in a trade, and for some reason it's okay to lose that money back because it's profit and it really wasn't yours anyway. It's
I get calls from people all the time saying, I'm so worried about my S&P position. It's against me by $10,000. And I say, hey, wait a minute. The time to worry about your position is before you make the trade. If you've made the trade, you went into it accepting what your risk would be.
Mm-hmm.
You made the trade, take the loss mentally,
that.
and that's it. That's all there is to it. After you've made the trade, it's too late.
But why is it, Jake, that people? Yeah, I mean, you can beat it into their. You got to beat it into their heads. But why is it so hard for people to accept that? They'll just go over and do the same thing again.
Hey, listen, guys. For men, it's a penis thing.
Yeah.
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 To be perfectly blunt about it.
Fausto couldn't have said it any better again.
Listen, I can't compete. I can't compete against Jake. I mean, he's got seniority. You could say he can get away with that. Me, forget it. They'll hang me.
I apologize. Apologies. Sorry.
No, you can't say it better than that. It's the truth, though. It's a big ego. People have an ego. They can't admit when they're wrong.
That's why women are so much better traders than men.
I tell that to people.
I say it all the time.
Why don't more women trade? If you're out there, women, and you're listening to this, you're special. Not special because you're watching this. Special because somehow you don't have as much of an ego involvement.
Well, they don't have to lose anything. They don't have one.
That's right. That's true.
Well, we're getting deep now.
Here we go. Another expression that I wouldn't actually have gone to. But Bennett, why don't you clean this up a little bit?
Boy, I'll tell you, this is tough to add anything new here. I have you ever heard the term, good trading is actually boring? And I think it basically is saying what you're saying, because when you have structure, you're running your trading like a business.
Yep.
And you don't have that excitement like so many people want from the markets, kind of like when they go to Vegas. You put the bet on, you hope it turns good. That, I think, is what that adrenaline drives so many traders to trade. And really good trading is actually very structured, a keen eye on risk control. Like everybody said here, especially Jake, when you said, the time to worry is before you take the trade. And if you, take the steps to protect yourself, so if the trade goes south, so to speak, you know what you're going to lose. So, I call that kind of like the trader's mindset. Trading is very psychological. And, once you get emotional about it, you're done. You're just absolutely done. So I think you have to add structure, and you don't always want to be trading your last trade. I think that's a big problem people do, is they kind of bounce around the markets like a ping pong ball, so to speak. You want to base all your trading decisions off your stats. What is the probability of this trade working well? And then go with that. We're always excited when we take a trade. You should be optimistic, not necessarily excited, but optimistic. But you got to protect your downside. That's the key, because you just don't know which trades are actually going to work and which are not.
Think about this.
Take that kind of attitude. I think it keeps you humble, and I also think it keeps you structured.
That's good. It's true. Think about this. The average person who's just coming in to trade, they haven't learned anything. They want to learn. They go to a conference. There's 57 different speakers. They learn 28 different methods. They watch CNBC all day. They don't know what the hell to do. They're totally confused. So it's a question of focus. You really have to focus on doing the things that you know how to do and things that you do best. Right. Otherwise, it's a waste of time.
How long ago did you write Investor's Quotient, Jake?
1982.
1982. It's still being published, right?
I believe so, yeah.
It's still out there. When you wrote that book, was there something, what inspired you to actually write that book about the mental and emotional issues? You're a technical guy, seasonal guy. What was it that had you stop the music and say, I got to put a book out on the mental and emotional aspect?
I'll tell you the truth, guys. I had a call from John Wiley and Sons, a publishing company. They offered me $10,000. So I said, I'll do it.
They got away cheap, I think.
Well, I'm still getting royalties. But the thing is this. It is definitely a psychological game. The more psychology you can take away from it, the better off you'll be.
Mm-hmm. Well, I think
the interesting thing is you don't really realize that when you first start trading, how much psychology really comes into play. I think in new traders, they have no idea of the psychology involved.
True.
I think if I were to help people turn the corner, and they don't get any other input right now, and they've got to live with what they're hearing. You've heard a lot on here. I would just add that 3 things. One is that you need to make training your mind a daily event. And when I say training your mind, whether it's a quick subconscious training where you relax and do a little self-talk about how this is going to be a positive day and that you'll follow all your trading rules and so on, and that winning is as good as losing as long as you're following your trading. And the second thing I would give you a piece of advice on is you've got to, it's, trading is a self-adjusting career, and you've got to continue to improve yourself as a trader. And the only way you can do that is to analyze who you are at the end of every trading day, and make sure that you've done the checklist of things, that maybe 2 or 3 things on your checklist. I didn't move my stop. I didn't, the things that you seem to screw up on. Make a checklist and review yourself every day, and give yourself a grade. And if you screwed up that day, make yourself a commitment not to do it the next day. And before you start trading the next day, commit to it again that you're going to be a wise and disciplined trader and do the things that a wise and disciplined trader does. And I think that when you do all of that, you're actually maintaining the most important thing about the mental emotional state, and that's maintaining a positive expectancy. You have to see yourself as a winning trader. And I'm not talking about winning every trade. I'm saying that you have to see yourself as somebody who's following a process, a winning process. And if you do this self-inspection and you journal even quickly about how well you've done, and some of the mistakes that you've made that you want to improve the next day, you're going to be able to maintain that positive expectancy.
May I interject a point?
Sure. Mm-hmm.
I have personally mentored thousands of traders all over the world. They're all the same. Think about this. New trader makes a trade. They lose money on the first trade. They say, well, you know what? It's not 100%. I expected I would lose money. It's not a problem. I can deal with it. They make another trade. They lose money again. Now it's getting serious. I say, wait a minute, 2 losses in a row. What the hell's going on? They take another trade. They lose 3 times in a row. The fact of the matter is that most traders cannot handle 3 consecutive losses. But we know from strategy testing that sometimes you got to lose 6 or 7 times in a row. If you can't deal with the drawdown, it's never going to work, period. Most traders can't get past that 3rd loss in a row.
Mm-hmm.
They say, just to add to that, they say it takes 1,000 trades before you really start learning how to trade.
Right. You have to have a large sample size.
Yeah.
People look at it like 1,000 trades. How many ticket charges? This and that. I'm like, listen, it's not for you. You're doing this for the rest of your life. It's part. You're working volume. You have to. It's like a baseball player. How many times he's striking out before? He's batting 300. He's one of the best baseball players in the world. He's striking out 700% of the time. But you're not. You're not. Hopefully not 300. You're batting 700. But as long as you're cutting your losses small, and that's how you know. And I always tell everybody, most important thing is this: 1 share. I joke around all the time. Just trade 1 share of the stock. Everybody's like, you can't make money, this and that. Listen, you got to put some skin in the game. You can't play on demo mode forever. I still got students I train. The students of mine, like, oh, yeah, I've been demo trained for a year. I'm like, a year? You should be not even demo for 2 weeks.
Hey, it's
like demoing, you're only supposed to learn how to use the platform. Trade 1 share.
It's like living with someone before you get married to him.
Yeah.
You don't find out the really
you got 1 foot at the door and 1 foot in the door.
You don't find out the really
I like Jake's analogies. They're very good.
Well, Jake, what is it about women that make them better traders? Is it the emotional aspect?
Women are so damn logical. It's unbelievable. Especially when it comes to money. And so they look at it and they say, okay, it's a loss. It's a loss. Let's cut it short right away. They're more prone to do what they're supposed to do when they're supposed to do it. And that's really what makes the big difference.
So we need to turn on our feminine side. I know that's easy for Bennett, right? He seems to get it.
Thanks, Norman.
Fausto and that's tough,
I got a lot of women in my trading room. I mean, they are great traders. They do contribute. They're a little bit more. Like Ben said, Jake said. I mean, they're a little bit more. They're a little more disciplined. They know how to cut the losses and just move on. I think that's where it comes down to it. They know to admit when they're wrong.
More reality based.
Yeah, more reality based. Guys have a little more of an ego. They think they could tough it out.
That's why they love us.
They love to see us sweat. Well, anyway, we've got about 20 minutes, and this is the part of the show where we can give a trading idea to people out there that may be looking for a way to get involved in what we see as a down market, or a way to or maybe another market that moves with it, that I'll be showing, that I think may offer some people who are not already in this move a place to get in with a reasonable risk. Let's start with Bennett this time. Bennett, you got any thoughts on a particular trade or way of making money this week?
Oh, I thought you'd never ask. All right, let's take a look. One quick trade I think we kind of like in this market that we think is going to kind of be where selling is the theme a little bit is Merck. Now, this is not one you're going to be selling forever, but there is a target range here. And in terms of Elliott wave, we think it reached a 3 here top. This would be a 4 fib retracement down here. So again, if you went short here, you want to put your stop here and calculate your trade size and then see if the risk to reward makes sense for you. But you got a red PTF here. So there's a high probability we're going to dip below here, which would put it into the target zone. So we think it's pretty good. We like this position to get in here, which is today's activity. This is a live chart. And if you put your stop up here, your stop is fairly close. So your trade size is going to be able to be higher than if your stop would be, for say, back here. So this is one that we like for today, for this week rather. And you'll probably, it's a daily chart, so you could be in it for the week or maybe 2 or maybe 3, depending on how long it takes to get down there. So that's one that we like in this type of environment today.
Mm-hmm. Interesting.
Can I show a chart?
Yes, you can. Go ahead, Jake. Let's see what you got.
Okay, let me show you this, if I can figure it out. So bear with me, guys. Anything yet?
Don't see anything yet, no.
Just bear with me. Okay, how about...
Gotcha. All right, I see it's loading.
What do you see?
I see a lot of red bars.
Okay, this is the 10-minute S&P chart using a method I call the 888. I don't have time to explain the whole thing, but let's look at it this way. When a bar turns green, which is where we are right now, and this bar is not complete yet, I've got a buy trigger. So within the next 10-15 minutes, possibly by the time we get off the show, we'll have a buy trigger for a day trade from the long side in S&P. Could be very dramatic given the size of the move we've seen to the downside. So that's what I've got on a very short-term basis.
Interesting. And if that right leg turns below the close, that bar's going to turn red and it won't be a trade.
You got it.
Gotcha.
So that's what I got right now.
All right, Fausto, thoughts?
Yeah, let me see if I could do share a screen for you guys. So you should be. Do you see my screen? You should see it, right?
Yeah.
All right. So this has been a stock that I've been a fan for a while. It's called CSQ. It's more of a little bit of a swing trade, even though being a day trade. CSQ is one of the stocks that this stock actually pays you a dividend of 8% a year. Pays you every single month on the 4th every month. No matter if the stock has been up or down. So it's taking a little bit of hit right now. I bought a lot of it. I owned it for about a few years now. There are some things that you learn as being a day trader, what to swing trade, because you can't, obviously you got to do something. And like this stock, like right here. So I always get people ask me, is there any good dividend stocks out there? Everybody thinks that's a brand name. No, there are a couple other pretty good dividend stocks like CSQ out there, but it's coming up to with when you get these corrections in the market, if there's something that you really, really like, this is really my tip that I'm kind of give you. If there's something you always really like, company, you really, really say, damn, I wish I could have bought that cheaper or whatever it is. When you get these catastrophes like you're seeing today in the market, you want these big crashes because now it's going to be another opportunity. A lot of people looked at it and they freaked out when we had when we had the crash, the Christmas crash, and the markets, when the government shut down. When the way you learn to be a good trader is you have to be in these bad markets because you're going to see how they come back. And if there's anything out there that you really kind of like, then you want to see a down market, it's going to be your opportunity to buy it. So this is basically just one of several that I'll do. Not as more of a day trade, but like I said, more of a swing trade if you're a dividend player. That's basically what what I've been looking at as a tip.
Gotcha. Nice. Very nice. All right. I think you're seeing right now a chart of the Japanese yen. Is that what you're seeing? A bunch of lines. Can you guys see that chart?
Yep.
Yeah.
Yep.
This is a Japanese yen. One thing that kind of dovetail on your thought about looking at when you miss a trade. I've noticed that when I missed a gold trade, I would always look at silver to see if it's moved yet, and maybe I can get some of that juice with silver because I miss gold. And the same thing is with the currencies. One currency takes off, and that tends to move in opposition to the U.S. dollar, or the fact that it's moving is something to do with the weakness or strength of the U.S. dollar. So you see all the currencies moving. You say to yourself, you miss one currency and you jump to another one. I have found that you're better off waiting for a correction of the leader of that pack than trying to jump onto something else to try to make it okay for yourself, having missed the real one. So this is the Japanese yen, and you can see, forget these lines other than they were trend lines that I was drawing. And this is an 8 bar, which is something I've been playing with the last few months and really like, part of a new simple trading plan that I'm using. But this is an exponential moving average. I found that this particular formation with a small body and an extension over this can lead to something very interesting. You see one right over here where you have the shooting star with a move on the opposite side of this moving average, and you see what happens as a result of that. Now, I'm not saying it happens every time, but these kinds of formations I tend to like to see on the right side of this moving average. Anyway, this looks like it's making progress. Now you see where it did poke itself over what was the previous high, but is not yet closed. It's pulled back. So, we need to wait for the high here to believe that we're going higher in the no man's land. But my thought is to wait for a pullback. My suggestion is to look to get long this market on a pullback to of this market, wherever it may be. You can use your Fibonacci retracement. You can watch it hit this 8 exponential moving average or some other. I'm looking here at the momentum indicator, and where this is what HEMA calls the bull support zone, where you can see this market held that momentum there and didn't really get oversold, but held the bull support area and is moving higher. There's no reason to believe this thing is not going to move higher. So a small correction to get in. This would be my choice for being able to take a small bite of what could be a big correction in the stock market to see. Also, I think there's some fundamental action in the Japanese yen from the standpoint that their interest rates are so low that they can't go any lower, which means that if anybody else goes lower, including the U.S., then they may be able to, they're going to look like they've raised it in comparison, so which will make their currency stronger. So there's all kinds of reasoning you can do, but I always go by the chart, of course, as most of you guys do. Okay, I'm going to stop sharing this. Any other thoughts before we wrap it up? We've got about 10 minutes left. Any thoughts, Fausto, that you'd like to leave the crowd, especially in this kind of a week of turmoil?
Well, if you're planning on focus on trying to buy something that you wanted to, just sit back and wait. You need to see a little bit of a comeback. Even if you chase the stock a little bit, if we do come back, the market's come back a little bit, came back about 70 points. So, I mean, you got to have a little bit of a comeback to worry about it. You got to break a higher high, not one high, then buy into it. It's pretty much it. Other than that, I would just sit back and wait. I mean, all my traders in my room really haven't really done too much. Just more we had a little action, but other than that, as a day trader, I would sit back. It's not always exciting to kind of trade a market like this. Look at the market. It came down a lot. It's been sitting here for the past few hours. So let's see how it's, like you were saying earlier, let's see how the market closes. But if, like I said, if there's something that you do like, you want this market to drop as far as you can to buy it back cheaper. But other than that, I wouldn't really do too much right now. I would sit back on the sidelines and watch.
Bennett, thoughts?
Well, first of all, I think this was a great group of people here today. I think we have come from a very diverse background, all different, little bit different ages there. But we hit a lot of good points here in a very fun way. And I think one of the things that I think is really important to leave everybody with is risk control, the trader's mindset, developing that. And also too, some real key points were mentioned here. You really need to, as a trader, I think, become pretty intimate with your trading statistics. And the only way to do that is to test your trading on enough trades so the stats are viable.
Something.
And one of the key things there is, I think, do enough trades so you know your largest wins, your largest losses, your average wins, your average losses. That way, like Jake said, when you have 3 losses in a row, you're not freaking out because you've tested your system and you know what to expect with it.
Can I interject something?
That kind of structure, you really can start to trade in a very calmer fashion and really make trading a business. The other thing too, you hear a lot about, I'm basically, as a trader, maybe 60% right, 65% right on a good day. So I'm losing 4 out of 10 trades. But you know what? You can make a lot of money that way if you keep your losing trades small and let your winners run. And I think that's something people need to realize, is you're not going to win all the time. And you have to get over that frustration created by a number of losses in a row. So I think that's an area where people first have to really hone and become successful to be successful in this business, because there's a lot of pieces or slices in the trading pie that you have to master, but that's a really important one.
Yeah, no, those are excellent points. Jake, I think you're trying to get something in here.
I was just going to say that we made some excellent points today. The good news is that we did what we did. We gave some very, very good advice. The bad news is most people won't listen. And that's very frustrating to me after all these years, but I think we did a great job, and I'm really happy to be here with the rest of you guys.
I appreciate it, Jake. Always great having you. And, I wanted to ask you, Bennett, though, about your and I know Fausto is this too, position sizing is talked about a lot.
Yeah.
And I think that I'm a guy who likes to, I never trade as much as I can. In other words, I'm always trading less than I have the ability in my account to trade.
Okay.
I'm never fully extended. And it's not because I'm keeping some powder dry to buy something else. It's because from a perception standpoint, I'm in control. It's another thing that tells me, and it's true, the less money you're risking is in control. I mean, if you risk no money, why do this whole thing? But my specific question to you is, do you generally buy most of your positions, all of your positions on the initial trigger, or do you add on movement in your direction? How do you work?
You want me to go first, or?
Yeah.
Okay. Actually, very structured. All this should be pretty structured out in how you do this. For example, whenever I enter a trade, I always know where I'm going to get out and what the entry price should be. Okay. And I emphasize should be. So if I can get in at that price, then I can also know if I have my entry and exit, I can also calculate my trade size. And trade size takes into account your account size. It takes into your win-loss ratio and your payoff ratio. All right. In other words, how many trades, your average win versus your average losses, and so forth. So once you have that, you can calculate the percentage of your trade risk that you should take on each and every trade. And from that, then the variable you solve is your trade size. Now, once you do that, all right, your initial risk is set. So when you take the trade, let's say you're going to lose, you're expecting at the worst case scenario to lose 2% of your account size. Well, if you have a $50,000 account, that may be $1,000 loss, right? 2% of the account size. So as a trade matures and you get profitable and you get another entry, all right, if you were to just go in again, well, your risk would increase because now your trade size is larger. But if your stop gets moved up, then the risk possibly from your first trade is gone because your stop protects you, and then you can recalculate another 2% into the trade. So that's the proper way to add into a trade versus, okay, averaging down or every time you have a more of a movement down, you add more. That's an investment style, but not really good for active traders because it increases your risk. Now, that's trade risk, but there's also market risk. What happens if the market gaps against your position and you've added on, and now you've lost a lot more than what you expected to lose? So that's market risk. The only way to protect yourself against that is make sure the dollars you're trading with in your account is truly risk capital that you can afford. And again, that can be calculated in a very structured way based on your net worth.
Excellent. Fausto, can you give me 60 seconds on position sizing? What your thoughts?
Yeah, I mean, listen, as a day trader, I mean, everyone always tries to position themselves. Like, should I just cut up on my shares, whatever it is? I've been always a guy. It's just me, but I just like to buy my positions at one shot. Always try to focus on whatever you can afford. You don't need. See, there's a misconception. People think you need a lot of money to day trade. You really don't. A lot of the stocks that we trade, there are 25,000 stocks out there to trade. Everybody's always trading the top 100. You don't need to go out there and spend a lot of money on a stock to make a day's pay. You buy a $5 stock and moves 50 cents versus a $50 stock and moves 50 cents. It's still the same $500. The other one you need 50,000. The other one you need 5,000. You deal more expensive stocks. You deal more expensive traders. You got a lot more at risk. So that's usually that's the way I was taught. But at the end of the day, your goal was still to make that $500 a day. There's your six-figure salary. If you're a swing trader or whatever, yes, those I was taught you could always scale in and do it. And I do that if I really like a stock on some of my swing trades. But as a day trader, you're basically a little bit more of a scalper. There's only a very small window of trading. We do most of our trades in the pre-market. So by like 8 o'clock in the morning Eastern time, we're already started positioning in. Some of them, like if you meet your goal, that's it. You're done for the day. You don't try to sit there and keep, oh, I made 300. Let me try to make 500. Oh, let me make 1,000. And sure enough, that $1,000 gain will probably end up being at the end of the day, be a $2,000 loss. You just got to focus on what you want to make for the day. Focus on that little quick percent. And then most importantly, if you lose what your ultimate goal was to make a day, it's game over. Because I always find, that let's say your goal is to make, I don't know, 200 a day. You want to make $50,000 your salary. You could probably afford a $400 loss. But you got to keep in mind that you could lose 4 or 5 days in a row. Can you afford to lose that? If you can't, then you shouldn't be trading that much. So that's basically the goal. That's the way the goal comes out of that.
Kind of math that Bennett's talking about. You got to go through. Jake, it looks like you got the signal.
We did. We're along the S&P now, looking for a move of about 200 to 300 points. Very quick.
Now, would you wait here, or would you wait for the breakout of that new high and that long bar?
No, we took the long position right over here.
Right here.
At the end of this bar right over here.
Beautiful.
Our target is the largest range bar of the previous 10. So our target will probably be from here to here, added to here, which put us somewhere up here. I could do the math if you want me to. But that's what we're looking at. And if we're wrong, we're going to be stopped out at this blue line right over here. So we're not risking very much.
Mm-hmm. Would you, now that we're talking about adding positions, would you add one on a breakout of that long red bar?
No.
Okay.
And in terms of position size, I always tell people, trade the position that doesn't scare you. If you're scared, you did something wrong. I don't care if it's 1 contract, 2 contracts, 100 shares, 1,000 shares, whatever it is that doesn't scare you, that's your level. The rest of it is fine-tuning once you learn to be comfortable with your level.
Yeah. And for me, I've been on some of these. In fact, the latest simple trading plan that I'm calling loaded gun. The trigger is very high probability that it gets off to the right foot right away. So I always talk about putting those couple of positions on. If you're putting on 2 positions or 3 positions, put them on at the beginning and then peel them off with the first thrust. This way, you've got some in the pocket. You've reduced your overall loss if it happens to back up and so on. So I like peeling them off after the first entrance. Guys, it's been a pleasure. When David asked me if I'd like to moderate, I heard you guys were on it, especially Jake, because I know Jake and Fausto. I know Fausto, Bennett. We're becoming friends. So it's been great, and I really thank everybody. David, how'd you think it went?
I thought it was a great show. Lots of good discussion.
It's official.
Norman, you did a great job. Thank you.
If you guys want to do a quick closing statement, if you have any upcoming events or anything you want to share with the audience, you guys can do that.
Fausto?
Yeah, well, Thursday, now you bring it up, Norman is going to be coming on our Cyber Expo here at Cyber Trading University on Thursday from 1 to 3. If you want to know a little bit more about, day trading, a little bit more psychology, I will even have Tom Busby there talking about futures. Great event. Listen, as a trader, you can never not learn enough. Listen, there's some really good traders, but you got to learn a little bit from everybody, and and don't be afraid to try a little bit of something from everybody. To kind of know what it's for, but you can't do this on your own. You got to learn, and you got to learn from professionals that do it all day long. So come out and see us at Cyber Trading University. Look forward to seeing you in there.
I'll jump in with a dovetail of that, and I'm excited to kick that off on Thursday. And also, it is good to on the other point. Jake talks about seeing all these people, and you can confuse yourself to death. The idea is that when you see a lot of people, a lot of traders talking about their way of to affect your own success, I think you've got to find something that you're comfortable with. You kind of got to feel it, and it's got to make mental sense to you. So, and then when you find somebody, commit to it and dive into it. Don't keep looking around after the first 3 losses. So I'll see you on Thursday with Fausto.
Thanks, guys. It's been an honor and a privilege.
Great show. Norman, you did a good job. Thank you.
Okay, it's official.
You're natural. You're a natural.
All right.
Right. Bennett or Jake, did you have any final thoughts about your sites you wanted to share?
Nope, not for me.
Yeah,
Okay.
just visit us at TradersCoach.com. I think we kind of pretty much said it all here. So,
All right, sounds good. Yeah, thanks, guys. Lots of great info today. So just a quick reminder to everyone watching, be sure to subscribe to Timing Research on YouTube and your favorite podcast directory. And you can also go to TimingResearch.com to get access to the show or any of the past reports or show archives. Be sure to join us tomorrow at 4 p.m. Eastern Time for Analyze Your Trade, episode number 77 with Jim Kenny, Andrew Keene, and Matt Buckley. And just want to give a final thank you to all my guests today. Fausto Pugliese of CyberTradingUniversity.com, Bennett McDowell of TradersCoach.com, Jake Bernstein of TradeFutures.com, and
Dash Futures.
Yeah, Trade-Futures.com, and Norman Hallett of The Disciplined Trader. Thank you for moderating again. Thanks, guys.
Thanks, guys.
thank you.
Thanks,
Bye-bye.
everyone. Good to see you again, Norman.
You too, Jake.